Yes, good evening. It does say Simon. Simon is one of the brokers at Harvey. I'm here this evening to support the group and give you a little bit of information. So just very quickly, Harvey, you may have seen, if you go to other PIN meetings as well as this one, may have seen us before, giving updates at Kensington, Blackfriars PIN and some of the others around the country. We're all mortgage brokers within the company, but everyone that gives advice is importantly an investor as well, which I think is really key. So I just wanted to talk to you about a couple of things in the industry that I thought might be of interest to try to help you doing some deals. Before we do, I just wanted to talk about house prices, because obviously with the run-up to the election, there's reports in the press that the market went a little bit stale, and there's been various different reports, hasn't there? And all of those reports are trying to put a little bit of negativity into the housing market. The one that I like to pay attention to is Land Registry, because that's the finite record of what people are paying for property. Would you agree with that? Yeah. Great. So in a year, from April 14 to April 15, we saw a 5.1% increase nationwide. That's from an average house price of 171 to 179. Okay. In London itself, we saw a 10.9% increase over the same period, with the average property price being 544, so nearly £500,000 as an average property value. What does that mean to us then as property investors? Well, I think it opens up two opportunities. For those that are doing flips, then you can put the extra thumb screws on, can't you, for the people who are buying those properties, point out to them that properties are going up in value, and that creates urgency. So those who are buying from you need to make their decisions now. But also for those that have got properties that you're currently holding, perhaps you've had them for a couple of years, perhaps longer, and you haven't reviewed the mortgages on those, well, perhaps you've got a little bit more equity in those than you originally thought. And you might be able to refinance them to pull some money out to go on and make some further investment. So just two trains of thought from that. And another thing that comes up, completely different topic, but another thing that comes up for us frequently with our London investors is flats with short leases. Anybody else come across that? Yeah. Yeah? Okay. So, if you're going to flip something like that, then you might want to take a bridge. That would be the right way to do it, some sort of short-term finance. But if you're looking to hold the property, I just wanted to point out a couple of things here. So if you've got a property that's habitable and it's ready to let, but it's just got a short lease, then Aldermore and Skipton would allow 40 years left on the lease plus term. The minimum term for Aldermore is 5 years. So if you've got a property with a 45-year lease, the value might be affected by that, but the lender will still lend. And with Skipton, the minimum term for a buy-to-let mortgage is 2 years. So 42 years left on the lease, and they're willing to lend. So that was quite an interesting point, because some of the lenders, like our friends like BM Solutions, a very popular lender, want 70 plus years. So it just shows you that there's some extra scope there if you know the right lenders to go to for the right type of thing. The Mortgage Works, very popular lender, 55 years. So they just want a total of 55 years, whether you're taking a 20-year term or taking a 5-year term. So that's just something on short leases. And then to focus then on one particular lender, I just wanted to focus on bridging finance solutions. There's a wide variety of different bridging companies in the market, and they all do different things. So what these guys will do is consider lending up to 85% of the market value stroke purchase price of the property. Okay? It has to be the right deal. You have to be buying a little bit below market value to achieve that, but they will lend up to 85% loan to value. And they'll also lend 100% of your refurb costs. So let's say, for example, you're buying a standard house, it's tired, it's not habitable, and you're going to change that into a HMO. Whether you're going to spend 20 grand or 70 grand on that, as long as there's enough of uplift in value, they will lend you all of your works to purchase. So 85% of your purchase price, and all of your works to refurbish. Does that make sense? Yeah? So I think that's quite interesting. They also calculate their interest daily. So, in other words, if you go over your anniversary, if you like, your monthly anniversary, you don't pay a full month's interest. You only pay 1 day's if you go 1 day over, effectively. And that's quite unusual for a bridging company, and that will save a lot of costs, as well as no exit fee. Rates from 1.25%, the maximum term is 18 months. And there's a 1% fee, as you'd expect, a 1% facilities fee. So quite an interesting lender. They're not a lender for everyone, but if you're doing HMOs and smaller type refurbs, then that's a very interesting product that hopefully will open up some scope for you to be able to do more deals. So that's all from me. Howard Bowes, I'm Managing Director of Harvey Bowes Mortgages. Simon's also here from Harvey Bowes. You can talk to either of us. More than happy to answer any questions in the break and after the meeting. Thank you very much. Oh, and Mark as well. Thank you very much.